everyone, my name is Grace Cisna. I'm the CPA on staff with ProjectionHub, and today I wanted to take a little time to walk you through our multi-location brewery restaurant template. This template enables you to build the financial model for a brewery that has several locations of either tap rooms or restaurants. You can see in this model you can build in up to 5 different units. The first unit is always assumed to be the brewery, and then units 2 through 5 can be either tap rooms or combination tap room restaurants. This is a further developed model from our brewery template. Our brewery restaurant template is similar to this one, but it assumes just one unit sort of attached to the brewery. So this follows the model better if you have a brewery and then are opening several different locations in which to sell the beer yourself. So I wanted to walk you through this template, show you how it works, and show you how to fill it out. So just like all of our ProjectionHub templates, there are several tabs at the beginning here that are labeled input tabs, and they're also colored in this light blue color. And these are the tabs in which you're going to modify or enter new data in order to get your financial projections. On these tabs, there are also cells in the same light blue color that show you where you need to be updating data or entering new data in order to create financial projections for your specific business. Now you'll notice there is data already in the template when you download it. This is example data. So for example, the starting investment here is just an example. Now I built this template. All the example data is reasonable for a brewery, but that doesn't mean that it's necessarily industry standard or recommended values. The recommended values are the values that apply to your specific business. So if you don't know, it's probably okay to stick with the data in here, but we recommend sort of researching and figuring out what would be applicable in your area for your specific business for all of the data shown in light blue. So starting on this Input General Assumptions tab, on this tab we're gathering data to fill out your balance sheet. This tab is related to the model as a whole, and we will gather some more data that's specific to the individual types of units. Those unit types are brewery, tap room, and then restaurant on the next tab. So on this tab we're going to collect information such as your company name, projection start date, an annual inflation rate for operating expenses. That's going to come into play on the Input Operating Expenses tab. We're going to gather any information about your starting investment. This could be personal investment or investment from outside investors, anything that's not a loan. We're also going to gather fixed assets. Now the fixed assets on this tab are asking about fixed assets related to the business as a whole. So we note here central office, warehouse, patents, trademarks, anything that's sort of related to the entire corporation and not just a specific brewery or tap room. So you wouldn't want to put brewing equipment here. That's going to go under brewery on the next tab. So this is just, for example, the warehouse or the central offices. And then corporate inventory, again, this is not inventory related to the brewery, such as hops and water. That's going on a different tab. This is specific to the corporate unit. So for example, if you sell merchandise online with your brewery logo on it, sweatshirts, t-shirts, pint glasses, whatever it is, that would be applicable here. We also have a calendar of opening of new units. So you've got 5 different units here. We're going to assume the first one is always the brewery. You should have at least one brewery. It wouldn't make any sense to have a tap room without the brewery, so it's usually the first unit here, and you can set the month that each unit is going to open. So you have 5 different units and then 3 different unit types. And you can see those 3 types are listed in this drop down here. Just wanted to point out the restaurant unit is kind of a restaurant combo tap room. So the tap room would be if you're only selling beer, and then if you are selling beer and food, then you can use the restaurant unit. So it could be that you have a brewery and 4 restaurants, or a brewery and 4 tap rooms, or as shown here, it could be a combination of both. You could also enter your effective income tax rate here. I recommend speaking with a tax accountant in your area to get a better idea of what your effective income tax rate is. Also on this tab, we gather information about expenses not specific to any one unit. So again, expenses such as utilities for the actual restaurant, water for the brewery, that's all going to get gathered on a different tab. This would be, as shown here, startup legal expenses, startup consulting, any graphic design, the website, bookkeeping, if you're developing any kind of software, all those things that are going to be used by all of the units, sort of for the company as a whole. Just with all of our operating expenses, you'll see that again on the operating expenses tab. We asked you to break out the first 3 months individually, but they are asking for monthly expenses in all of these boxes here. So for the remainder of year 1, months 4 through 12, it will show, for example, for bookkeeping, $100 per month. So these are always the monthly amounts. It's just going to use them. For example, this 103 will get used 12 times in year 2. All right, let's jump over to unit-specific assumptions. So we talked about you have 5 different new units here, and then 3 different types. So now we're going to jump over to the unit-specific assumption and set the assumptions for the 3 different types of units. So again, those are brewery, taproom, and then the restaurant, which is a restaurant taproom combo. So these are going to be specific to each of those. So some of these may end up getting used twice or more than that. So don't be confused by just there being 3. You can see we kind of have a color coding, this tealish color for the brewery, green for the taproom, and orange for the restaurant. And you'll see that throughout the model. So you can set a couple things, accounts receivable terms for the brewery. So that's anything that the brewery is selling on its own. You'll see on the next tab that the brewery has a wholesale revenue category. If that's something that you plan on doing, that's what this accounts receivable terms is related to, is that wholesale for the brewery. Inventory for the brewery, again, this is going to be the wholesale inventory. So you have your beginning inventory balance for the brewery. And then the inventory carried month to month is a percentage of sales. This is going to be a percentage of your cost of goods sold. So based on what you sell in a month, it's going to take a percentage of that to maintain as ending inventory each month. And that way your ending inventory sort of moves as your sales go up and down. Your ending inventory will move up and down as well. Here we're going to enter fixed assets specific to the type of unit. So your brewing equipment would go here, any real estate improvements, if you have office equipment at the actual brewery, that's going to get filled in here. And if there's any loans specific to the type of unit that you're opening, so let's say every time you open a new tap room, you need to get a loan. So there's going to show a loan of $25,000 with each new tap room that is opened. And that is coming from right here. So you fill out those sort of assumptions for each of the different types of assets. For the restaurant, kitchen equipment might apply, whereas that might not apply to the tap room. So all the sort of individual assumptions for the different types of units get filled in here. Moving on to the input revenue and cost of goods sold tab. This is the tab that contains the bulk of the model. There are a couple different sources of revenue, 4 different sources in fact. So the first one is corporate sales. So if you have any sales that are not related to any one location, this would most likely be online sale of merchandise or gift cards, stuff that can't be attributed to any one location. You can enter that here, just a cute little model that uses a growth rate and just a starting month revenue. And then you can also set a cost of goods sold associated with that. So for example, pint glasses, if you buy them for $12 and sell them for $24, that's 50%. So we've got our 50% cost of goods sold here. Now we move down to creating the brewery revenue and cost of goods sold model. So the brewery is assumed to have wholesale revenue. You don't necessarily have to have wholesale revenue in here. I can show you how to zero that out in a second. But that is going to be the one source of revenue that's associated with the brewery. And the rest of the revenue is going to be associated with the tap rooms and restaurants. So for the brewery, we first build the cost of goods sold model. Even if you aren't planning on doing wholesale sales, you'll need to build out this cost of goods sold model. So you enter your different sources, your different products that go into your beer, hops, malt, water, yeast, other ingredients, etc. You need labor costs. So the labor costs here can be 0, especially if you plan on doing the brewing individually or you're hiring a brewer who is salaried. I'll show you where to enter that in a minute. But this would be if you're doing hourly labor for the brewer. And they would go here, so how many hours they put into each batch would go there. From there, we're going to ask you to fill out the gallons per batch, and then we're going to figure out your materials cost and labor cost per gallon. From here, we'll have you fill out, you can fill up to 6 different types of containers. The most common ones we see are barrel, carton of bottles, and keg. You might also have a 6th barrel keg is pretty common. Crowlers, growlers, however you are bottling your beer, you would put it here. And then any costs of labeling, packaging, this would be the actual physical cost of the paper label. For a lot of things like kegs are reusable, but there is a cleaning cost associated each time you reuse them, so that would go here. The bottling cost would be sort of labor or whatever cost it takes to get the beer into the container. And then we're also going to ask for the size in gallons. There are 128 ounces in a gallon, just FYI. And then this will calculate your total cost per unit. From here, you can set your wholesale sales price if you plan on selling wholesale. And that's going to tell you your markup percentage, just so you know. Again, you're going to be filling out stuff in blue, so don't touch anything in white. This is just sort of data that's for your information. You can enter your wholesale sales here. So if you plan on selling maybe just barrels and kegs, this is how the model is shown with some cartons of bottles being sold starting in month 6. You can set the number of wholesales, and then it'll start growing after 6 months. So we allow you to create the first 6 months individually. If you don't plan on doing wholesale, you can just delete out this data here, and you'll see your wholesale revenue goes down to 0. All right, so that is our revenue for the brewery itself, so the wholesale revenue. You can see the wholesale cost of goods sold also gets calculated based on the cost that we've calculated up here. So let's move on to the tap rooms. So if you have tap rooms, again, these are the ones that aren't serving food. If you have tap rooms that are combination tap room restaurants, those would fall into the revenue category. So if you don't have tap rooms, you can leave this sort of untouched. It's not going to get pulled through. So jumping back to the general assumptions tab, if these are all restaurants, then it doesn't really matter what's in the tap room category because it won't get pulled through, and vice versa. If these are all tap rooms, then you can kind of ignore the restaurants for now. You don't have to do anything to them because the data won't get pulled into the model. So if you do have a tap room, we calculate first the monthly customer visits, and that is based on the number of seats in the tap room, the average length in average visit length in minutes of each customer, the hours open per week, and then we look at a capacity filled each week. So obviously not your chairs aren't going to be 100% filled at all times, especially if you're open sort of those weird hours of the afternoon between lunch and dinner where you might have a slower turnover. We'll keep the capacity pretty low. Generally, I like to set the capacity higher in the first months and then drop it down, and then it will use this growth rate in cell B71 to start growing again after month 6. So you'll set individually for the first 6 months, as shown in the light blue, and then you'll see that it begins to increase using this growth rate here. We also have a max capacity. So obviously you can never have 100% capacity because there's just going to be cleaning of tables or turnover, and there's just no way that you can get to 100% capacity. So it maxes out here at 90%, and that is set here. You can set it to 95, you can set it to 80, however you'd like, just to sort of keep the customer visits reasonable. The model will then use that data you just entered to figure out monthly customer visits to the tap room. From here, you'll set the average number of beers purchased per customer, in this case 2.1, and then the average price per beer. And you can calculate that out. If you offer several different beers, just take an average. Again, all projections are estimates anyway, so don't get too hung up on who's going to purchase what. Just go ahead and take an average of the beers that you sell and set the price here. And again, that price is going to grow over time as well. Using this right here, so you can see it jumps up to 601. That is coming from cell B78 here. So then the model will take the number of customer visits and multiply by what each customer is spending, as calculated here, to get our tap room beer revenue. Next, we need to figure out the cost of goods sold for that beer revenue. So the beer that's actually going into those pint glasses and being sold cost you something, and that we're going to use the data you provided up here to figure out that cost. So first it asks you the number of ounces per beer served. And then it asks you where the beer is coming from in your tap room. So a lot of times when you are serving beer, your beer in your tap room is coming right out of barrels or kegs. It's also possible that you're serving your own bottled beer. And so you just sort of set the percentages of the different types of containers. Again, if you have crowlers or growlers, if you enter those above, they will show up here. And you can set how much beer is coming from each type of container. Keep in mind you want this to be 100% right here. And then the model is going to use everything you've entered to calculate the actual cost of beer per 12 ounces based on everything you've filled out in this cost of goods sold model up here. And then the model will take that cost per beer sold, it will average it out, and then multiply it out over the number of customer visits to get the cost of beer. We also included some data just for your information here, showing you how many of each type of units is getting sold in the tap room, just for your planning. The last piece of cost of goods sold is hourly employees. So we look at the hourly employee pay over time. So this is average per person per hour. You can give them an annual raise as well. The model pulls in the number of hours open per week based on what you said above. And then you provide the number of employees per business hour, as well as the number of additional hours, so the opening and closing hours on either side of your business hours. and the number of employees you have during opening and closing. And then we calculate out your direct labor for the tap room. All right, the next part of the model is calculating out the restaurant revenue and cost of goods sold. This looks very similar to the tap room revenue and cost of goods sold, the exception being that there is also average spend on restaurant food per customer visit here. So again, it's calculating out the number of customer visits, and then we'll look at food spend per customer visits, and then it will have the same amount of beer spend. The difference between the restaurant and the tap room, besides the food, is that you're also able to sell or to model the sale of beer that is not from the brewery. So in this case, it will ask you how much of your beer is from your brewery. It's set to 50%. And then it will also show third-party beer revenue. So in this case, it's 50-50, so the revenue is sort of split evenly between the two, your beer and third-party beer revenue. And then we have to figure out the cost of goods sold for the third-party beer and the food, as well as your own beer. So it gives a cost of food for the restaurant. Next, it's going to pull down that percentage of beer that is from the brewery, and then the average ounces per beer served. And then, again, it's going to have you fill out the type of container used in the restaurant, just as we had the type of container used in the tap room up here. And then it'll calculate the cost per beer sold of house-made beer in the restaurant. And then you also fill out the cost of the per unit of third-party beer to get our cost of goods sold for that third-party beer sold in the restaurant. And that could be beer, wine, spirits. It doesn't have to be just beer. And then you also figure out the hourly rate for all of your employees within the restaurant to get that final piece of cost of goods sold. That is the model for revenue and cost of goods sold for the 3 different types of units here, as well as the corporate unit. Next, we're going to move on to the operating expenses. So again, we already figured out operating expenses for our corporate unit here on the General Assumptions tab. And now we are going to be completing this for the 3 types of units, the brewery, the tap room, and the restaurant. The 3 all follow the same model, so I will just go over it for one of these. So you can enter an expense category here. The first 3 months are broken out individually, so you enter monthly amounts here, and that is so that you can enter things like startup expenses that only happen in the first couple months of business. And then from there, it will choose a monthly amount. Remember to enter monthly amounts here in year 1, year 2, year 3, 4, and 5. And those will all flow through to the individual types of units. And you can see, you can fill it out for the 3 types of units. The last piece of input that we need is salaries and dividends. So if you have any salaried employees, they will go here. We have some examples in here, so I'll just walk through one of those. So we've got the brewer, we have their starting salary, employer taxes and benefits. So these all together include the total salary expense. We have a month started, so if they're starting in the first month, we'd enter 1 here. If you have somebody starting in year 2, you would enter month 13, etc. There are 60 months in the model, so if somebody ends in month 60, that means they're present for the entire model. And then an annual salary increase as well. That will increase every year on the first month of the year. And then in order to get these individual salaried employees into the 3 different types of model, plus the corporate model, so actually 4 different types of model, we've got this chunk of the part of the graph here, the chart here, and you can just enter the number of employees per area. So the brewer obviously works for the brewery, so we have 1 here, and they don't work in the other categories. We have manager here, they only work in the employee, so we have 1 manager for every tap room and 1 manager for every restaurant based on this model. And then we would have 1 CEO and 1 bookkeeper, and they would both be expensed under the corporate income statement here. Dividends will be anything that you pay yourself or your shareholders. Right here you'll see the cash at the end of the month for each of the months, so that you know how much is available to be distributed as dividends. If you plan on paying yourself that way, you would just enter the distribution amount in the month that you plan on making the distribution, and it will reduce your cash balance by that amount. Got a note here, so everything after this point is just the output file, so you don't want to change anything after these blue tabs here. So this is all just for you to look at here. So we have this at a glance tab, that's some nice graphs and charts based on your financial data, a really high level income statement summary and some key ratios here as well. And then we have a very high level summary of the income statement, the balance sheet, and the cash flow summary. Now I want to get into the details that are flowing through into these here. So the consolidated income statement is going to show all of your units, So we have up to 5 units, so the first one being the brewery, and then the other 4 being divided between taprooms and restaurants. In this case, we had 1 taproom and 3 restaurant taprooms. And the consolidated income statement is going to show the income and expenses for all of those 5 units, and they will show in the month that they start and from then on. So you can see when we jump back to our input general assumptions that we had a brewery and a taproom both opening in the first month of the model. So let's jump back to our consolidated income statement. You'll see the corporate unit starts in the first month of the model always, and then we'll have the brewery and the taproom starting in month 1 of the model. And this is going to be pulling in the revenue amount based on all the information that you've provided. So let me show you where that's coming from. So if we flip over to the income statement, this tab in green here, we'll see we have the 5 years of income statements for each of the 4 types of unit. So the 3 brewery, taproom, and restaurant, and then this last one being the corporate unit. So you'll see for a brewery in month 1, total sales are $456, and for a taproom it's $38,323. And again, this is the wholesale revenue, and then this is the beer sales on the taproom. So let's remember these numbers: 456 and 38,523. So it's the taproom income statement month 1, total sales. We'll go back to the consolidated income statement. You can see 456, 38,323 right here. And you can see for these units, we don't have anything in these first 12 months. Our 3 restaurants here. And that is because the first restaurant starts in month 13, second in month 24, and then in month 30. So if we jump back to our consolidated income statement, and then we'll scroll down to year 2 and find month 13, we can see there's our first restaurant starting here, and then month 24 was our second restaurant starting. And you can see in their first month, each of the restaurants made $214,122. Where's that coming from? We can come over here and look at the restaurant income statement, $214,122 in that first month. So back to our consolidated income statement, the last restaurant finally starts in month 30, as we learned on the general assumptions tab, and there it is starting up there. So that is how the models kind of flow through into each other. We'll see the type of unit. So the model takes the type of unit and its start month, and then pulls the data from these financial statement that's shown in green to pull them all the way through to create a consolidated income statement. So these are just sort of the example data showing you what is true for each of the types of units. So every time you follow a taproom or start a taproom, it's going to follow this pattern. Starting in its first month, but its first month might not line up with the first month of the model because, for example, we've got that restaurant that starts in month 13. So month 1 for unit 3 is actually month 13 of the consolidated income statement, if that makes sense. So we've got the consolidated financial statements, the income statement, the cash flow statement follows that same pattern, and the balance sheet follows that same pattern again, but instead of pulling from this income statement, they're pulling from their respective financial statements here, which are all listed. So if you want to see how each individual taproom is going to do, you can look at their financial statements here, that taproom in green, and then you want to see what it looks like here. So just to show you how this model works, let's look at our general assumptions. Again, we have a restaurant starting in month 13. Well, let's bump it up to month 10, and then I'll show you how the model will now start unit 3, that restaurant, in month 10 here. So that can be true, so you can see what would happen. For example, if you wanted to see if you would run out of cash by starting all of your units at the same time, well, let's see if we start them all in month 10. And then we go back to our cash flow statement, our consolidated cash flow statement. You can see that we now have a negative cash balance because we started all of these units in month 10. There's some cash outflows in month 9 that are associated with starting up the units in month 10, so that causes a negative cash balance. So that can help with planning as well, to realize that, like, how far apart you need to be spacing your units. You can look at your cash flow statement to view that. So there's a lot of data in this workbook. It is a very large file with a lot of data in there. If you've got questions about this file, please feel free to reach out to us at support@ProjectionHub.com. If you need help filling out this template once you download it, again, just reach out to us at support@ProjectionHub.com, and we would be happy to help you fill it out. We can also make modifications to this template. So if it's mostly working for you, but there's a couple things that need to be changed in order for it to fit your business model, we can make those changes. So please reach out to us if you need help. or if you need changes or you just have questions about the model, we would be happy to help.